In the longer term, when we look at oil demand, the EV adoption in China, I knew it was accelerating, but some of the charts that I saw were the clear drop in conventional car sales, in new car sales, and the hockey stick increase in the EV sales was quite remarkable.
And now with BYD's latest announcement of 5-minute charge to get 400 miles, I mean, just don't underestimate.
I've heard a lot of different pundits call China the green dragon because of how quickly they're going through the energy transition and how quick their build out is. For those of you who don't know, 85% of the solar supply chain is actually based in China. And recently our colleagues over in BNEF put out a report saying that a lot of the installs last year, in the top 10, 3 of the top 10 manufacturers are actually Chinese names, surpassing names like Vestas, Nordex, GE, and Siemens Energy.
So one thing about steel is it's not widely traded in futures land, but copper is the doctor, and there's a significant disparity between U.S. traded, CME traded copper, which is pumping up around $5 a pound. It's up 25% in a year, and LME traded London-based copper, which is the disparity between those two is the highest ever, and that goes back about 30 years in futures. So that's unsustainable. It's going to be reversed. Typically, it's a sign of demand pull when copper goes up, and we all know it's not. It's a disparity because of tariffs.
I think the deflation that you're talking about there in liquid fuels, Mike, has really unfolded in a big way in the solar space. So if you look over the last 18, 24 months, we've seen a big retreat in polysilicon prices, which is key input for making solar panels, and we've seen module prices follow down as well. Challenging environment for some of the companies that make modules, that sort of thing, but certainly great news for consumers because they get lower cost, higher quality modules.